We're looking at Government Motors China financials. Net income, marginal at best. Even when the company was doing 25, 27, 30, 35, almost $40 billion in revenue, just a couple of $1 billion in net income. But what's happened since production at Tesla's Shanghai Gigafactory? GM's net income has started to collapse. Ford China financials. China net income, decent until 2018. Then super negative, 2019 negative, 2020 negative, 2021 a tiny profit, 2022 negative again. So the question is, why are either of these companies even trying? In this video, the world's biggest and most important car market, China, is imploding, especially for foreign automakers not named Tesla. We'll look at new research, data, and some truly scary charts showing a collapse is currently underway. Allow me to summarize what's in today's video with a quick story from when I was in high school. Probably age 14, 15, in a mathematics class. At this point in time, I'd already realized I'd have instant access to a calculator and or a spreadsheet for the rest of my life, so I wasn't actively paying attention. In fact, I was doing whatever I could to not pay attention. A friend of mine also had the same philosophy. My friend, bored out of his mind, having listened to his Alice in Chains CD on repeat for the last week, needed something to do, some entertainment. He thought, I've got an idea. Hey, Stephen, what do you think about this? He had a brand new red gel pen. He looked at the fan. I looked at the fan. I looked at his pen. And I said, this is a great idea. So he pulled the cap off the gel pen, tossed it up into the ceiling fan, and you know what happened after that? Everyone in our classroom got sprayed with little spatters of red ink. Our mathematics teacher freaked the actual out, started screaming, oh my God, what is happening? Oh my God. Hands in the air, screaming, ran out of the classroom. Why? She actually thought blood was raining down from the skies. Maybe there was some Bronze Age book she'd read and this was the end of the world in her mind. Our class kind of thought this was rather amusing. The reason I'm telling you this story is, this is in essence what's happening in China. However, it's not red ink that's hit the fan, it's the shit. And it's not my classmates getting covered in shit. It's automotive manufacturers in the Chinese market. By the way, shout out to my classmate if he happens to be watching. Just remember, the Chinese automotive market is a leading indicator for other markets worldwide. What's happening in China is likely to occur elsewhere a few years from now. And if you guys would like to access a load of exclusive content and or just support the channel, check the links in the pinned comment. You can subscribe over on X, formerly known as Twitter, and Patreon, where you'll find close to 350 exclusive videos, my Tesla fair valuation over the next 10 years, and optional access to my Tesla valuation model. Check the links in the pinned comment. And here's the latest piece of research from Morgan. Just 25% of all new vehicles sold in 2030 in the United States will be electric Stanley. China EV price cuts. Supply and demand still out of balance. Price target still $250 per share. Tesla China effectively cut prices on Model Y by 4%, raising questions around excess EV supply relative to slowing demand, despite government stimulus. As legacy OEMs recast their China EV strategies with local EV partners, we wonder whether these moves are too little, too late. Tesla China reduces prices again. By the way, I've got to jump in here. Morgan Stanley will be able to publish this same line in a new research note essentially every quarter for the entire decade. And you can also add a different note and replace China with Europe, and another one replacing China with the United States. They have kind of told us this is their plan, refer to their master plan. Our China Autos team wrote on August 14 that Tesla China announced a promotion of 4% on Model Y long range and performance until September 30th. The team expects a limited impact on overall Model Y demand as the entry version remains the sales mainstay. For Model 3, entry version buyers can enjoy an insurance subsidy upon delivery. While order intake in China was solid at around 55,000 units in July, with 31.4 thousand of those delivered within China. Per channel checks, the limited time campaign could further boost demand ahead of the new Model 3 launch, likely in September. I think they're right. But it's not just Tesla. New EV promotions, or is that what they even mean? NEV? What is this shit? Promotions seem to be ubiquitous. Since August, various EV makers have launched limited time campaigns amid subpar demand visibility and macro uncertainty. By the way, macro uncertainty, that is putting it lightly, holy shit. The poop is thoroughly hitting the fan in China at the moment, especially within the automotive market. Discuss this in detail in recent videos, I won't rehash it. But for the record, keep an eye on what's happening to the Chinese automotive market in the next couple of years. It's going to be very fucking volatile, including Leap Motor, NIO, SAIC, as well as GWM Aura. The China team expects price competition to intensify in Q3, raising questions about China EV demand. Investors are becoming more cautious on China EVs after a solid run in the past 3 months, with Tesla's further promotional activity of particular concern, especially if you're not named Tesla. All that excess capacity built up over the last 10 years, wherein China accounted for over 300% of incremental global auto sales, will, in our view, be allocated to export markets rather than domestic sales. Thank you, Captain Obvious. This is the biggest no shit Sherlock moment I think I've ever seen in a Morgan Stanley research note. Duh. How long have I and many others been talking about the Chinese EV invasion? Compelling, economic, decent, China-made electric vehicles eating the lunch of mass manufacturers of internal combustion vehicles today in Europe, the United States and other parts of the world. The same thing happened with Japanese automotive a few decades ago. Toyota leading the, no pun intended, charge with compact, reliable, efficient vehicles. So thank you, Morgan Stanley, for this breaking news that electric vehicles from China will be exported en masse to other parts of the world and ultimately eat the lunch of many automotive companies. Guess that's why these guys and girls are paid the big bucks. In our view, China will shift from being an importer to an exporter of cars. I can't say this with a straight face. Yeah, we know. From being an importer to an exporter of cars, as supply-demand dynamics invert this decade. China's July vehicle exports corroborate this view, extending the lead over Japan, while total China July exports saw their biggest drop in 3 years, raising investor concerns over its post-scamdemic recovery. Auto exports saw another record month after a mild sequential decline in June. China's overall PV, I'm assuming they mean plug-in vehicles. What is with these fucking acronyms, Morgan Stanley? Exports were 310,000 units in July, up 4% month over month and 63% year over year. The first half of 2023, China exported 2.34 million vehicles versus Japan's 2.02. Oh, by the way, I'll spoil the movie here. Japan's vehicle exports are going to absolutely fucking implode. Why? Because they don't make any electric vehicles. Yeah, obviously there's some exceptions. But overall, the Japanese economy is heavily tied to, what's that company? You know, the one that's going to be bankrupt later this decade that starts with incompetent fucking leadership? Oh, that's right, Toyota, carrying the whole Japanese economy. And Toyota, so far behind on electric vehicles, it will be their demise. I'm sure everyone watching this has driven or knows someone in their family or a colleague who's driven a Toyota or multiple Toyotas. The entire company will not be in business later this decade. Those vehicles were produced mostly in Japan and exported to other parts of the world. So yes, it's over for Japan in terms of vehicle exports. They're done. They're not making the kind of vehicles that people want this decade. And if they're not making the vehicles people want, they're not going to be exporting the vehicles because there's going to be no demand. Meanwhile, where are the vehicles being made that people want? That's right, China. So thank you, Morgan Stanley, once again. China vehicle exports are going to surge. Japanese vehicle exports are going to fall off a fucking cliff in tandem with ICE vehicle sales. You can count on it. And legacy OEMs attempting to enter the Chinese EV market. We have seen an onslaught of announcements for cooperations between legacy OEMs and local players. Audi and SAIC, VW and XPeng, and most recently Ford and Chanjiang. While we commend legacy OEM management teams for their display of capital discipline in pursuing EV strategies abroad, we question their ability to drive meaningful change in the geographic market, even via joint ventures and collaborations, given vertically integrated Chinese EV incumbents already solidifying share with high levels of affordability, variety and quality. They've hit the nail on the fucking head. The local Chinese EV market is already very mature, years ahead of everywhere else. They've got their costs down, their production up, vehicle quality is great. Tesla's there as well. It's almost as if these legacy automotive manufacturers don't think they've got the capability to compete locally in China on their own, which is interesting because Tesla figured it out, but have decided, well, we still kind of want to be in China anyway, so let's joint venture and give away half our profits or more. If I were them, I would be pulling out of China completely. The reason I say that is because they're going to fail anyway. They obviously don't realize it, but they may as well just focus on some markets where they're not going to immediately fail, like the United States, Europe. Leverage their existing brand. Ford brand sales in China are down 82% since 2016. Wait, what was I saying about leveraging their existing brand? Exactly. The Ford brand clearly doesn't carry much weight in China. Certainly does in the US though. Kind of made my point. And Shenzhen's Ford China market share is less than 1%. Exacerbating the competitive challenges facing legacy OEMs is a decelerating Chinese domestic market as China shifts from being an importer to exporter of EVs globally. Not only do legacy OEMs have to face tough EV competition in China from the likes of the vertically integrated and increasingly affordable EVs, i.e. Tesla and BYD, they also have to reverse the trend of decreasing sales volumes, profit and share in a decelerating domestic market. And make sure you're sitting down because we're going to see some very disturbing charts in a minute illustrating that point. Interesting note here too, Tesla and BYD alone represent almost 40% of the Chinese EV market. Let's get to these rather juicy charts. Annual Ford and GM China unit sales. GM in blue. Does anyone notice a trend? Anyone? Yeah, falling off a fucking cliff. I mean, we're literally seeing a collapse here in sales. Now, what happened at this point in time? Let's call it around 2016, 2017. Because that's when both of these companies saw their sales peak in China. Anyone remember? Any guesses what was going on? Oh, that's right. Tesla, Model 3, bam. Then the Model Y, bam. EV disruption, bam. That's what happened. Ford and GM were, excuse the pun, asleep at the fucking wheel. And now they're having a fatal collision with reality. You don't make EVs, you don't sell vehicles, especially not in the most mature EV market on earth, China. This trend is going to accelerate. Now, it gets worse. Believe me, this is not the most disturbing chart. Nor is this, but we still got to look at it. Annual Ford and GM China market share. Now, in green here, we've got local players' share massively increasing. And keep in mind, Tesla's been surging in China as well, which in and of itself is a headwind for local players' share. Yet despite that, we've seen a surge in local market share from Chinese-made automotive companies. Meanwhile, GM and Ford's market share, which in and of itself was never great, starting to collapse in a big way. I'll save the most horrifying chart for last. For 2 decades, China has been the growth engine of the auto industry, supporting margins for car companies and their suppliers. This is changing rapidly with each month. The China rules have changed. What about the strategy? With 1, limited unit sales penetration that has not been increasing over time despite incremental investments. 2, intense competition in the EV space, both from local players, BYD, NIO, Xpeng, and Tesla. And 3, a generally challenging time to be operating in China. We wonder what is next for Detroit's strategy. Well, if it was me, I'd be pulling the fuck out ASAP and focusing on the markets where I actually have a brand name that will sell vehicles that aren't that great, the United States. And I'll make this point thoroughly clear when we look at the final chart. The emergence of Tesla and domestic Chinese OEMs in aggressively priced mass market EVs, and that's before the $25,000 Tesla, awkward, in international markets has contributed to a sharp change in business conditions for the Chinese market. Could GM's recent $1 billion investment in a plant in Flint, Michigan be a sign of Detroit's future featuring a bias on profitable domestic ICE over EVs in China? We believe the names that would see relative success in this uncertain macro environment are those players who can demonstrate prudent capital allocation, doing more with less. Speaking of, check out my latest Patreon exclusive video for a comparison of how much more Tesla's doing versus Rivian, the same stage in each company's life. It's quite an eye-opener. You join Patreon with the link in the pinned comment. Or a willingness to look beyond volume growth as the KPI of success. Within this context, we anticipate profound changes in where and how China ranks in the overall strategy for US domestic OEMs. GM and Ford were significant players in China pre-scamdemic. Unit sales compound annual growth rate was 17.1% for GM and in fairness, by the way, for those who don't know, this is including joint ventures. So a lot of the GM sales, maybe all of the GM sales aren't actually GM. It's GM's joint venture with Chinese local companies producing vehicles for the Chinese market. Not to take anything away from GM, just making sure you guys understand they're not GM vehicles being made just like the vehicles in the United States. They're specific Chinese vehicles for the Chinese market with a Chinese partner being produced in China for China. And 16% for Ford between 2003 and 2019, before dropping precipitously thereafter. I like how they're blaming COVID here. As COVID challenged supply chains and local players took share. The real reason, in the next part of this sentence, compounded by a change in consumer preference towards battery electric vehicle products, where local players were far more represented. Hold on to your panties, because we're getting to the rather disturbing charts now. Increasingly entrenched in that market, making an incremental push in penetration all the more challenging. China EV market share. Tesla in gold, I just thought I'd highlight, by the way. Now, you might notice, looks like Tesla had some decent market share in China back in 2014 and then a massive drop and now another increase. What's going on there? Spoiler alert, the Shanghai factory began production in 2019. Prior to then, Tesla market share, this was Model S and X being imported. Pretty impressive that Tesla was gaining that much market share early days, showing how much interest there was in compelling electric vehicles, even if they were extremely expensive in China a decade ago. And again, to be clear, the GM and Ford electric vehicle market share, you know the Wuling Mini death machine on wheels? That is technically, at least per this chart, a GM vehicle. It's a joint venture. GM and I believe SAIC produced that vehicle. It's a few $1,000s. I mean, it literally costs about as much as a night with a high-end hooker. Actually, I don't know how much a night with a high-end hooker costs. Probably in that vicinity for a car. Tiny range, no safety features. If someone farts at it, you'll probably die or at least be permanently injured or disabled. Not a safe vehicle, but there is a market for that. So keep in mind, unit sales of that vehicle alone are carrying the combined sales for GM and Ford of electric vehicles in China. Creates a very distorted view. In many months in China, the death machine on wheels is the second best, or sometimes the best selling electric vehicle in the whole market, but it's only a few $1,000s. Tesla's market share, with vehicles priced 10 times as much, now surpassing combined GM and Ford sales. We can also see Chinese OEM sales continuing to increase as a percent of the overall market share. Ultimately, we believe that the downwards trend in the financial performance of the Chinese divisions of each company speaks for itself. And like I said, make sure you're sitting down for this one and ask whether there could be better use of the resources spent in China. Yeah, don't spend them. Get the fuck out of the market now or regret it later when you fail. So here's a chart I was referring to. We're looking at Government Motors China financials. In gold, the thing that actually matters, China net income. In blue, revenue. For a comparison, GM's China net income, marginal at best. Even when the company was doing 25, 27, 30, 35, almost $40 billion in revenue, just a couple of $1 billion in net income. But what's happened since production at Tesla's Shanghai Gigafactory? GM's net income has started to collapse, and I do mean collapse. Why even bother? If you're making, call it $1 billion, give or take dollars, on about $30 billion in revenue, what's the fucking point? If you have to cut prices just a tiny bit, you're now suddenly losing money. Why even be in this market? And the answer is, good question, Stephen. Only a fucking idiot would be in this market. So GM, get the fuck out of China. It's an even worse picture for Ford, who don't unfortunately have a death machine on wheels to carry them. Ford China financials. China net income. Decent until, what do you know? 2018, super negative. 2019, negative. 2020, negative. 2021, a tiny profit. 2022, negative again. So the question is, why are either of these companies even trying in China? If anyone knows the answer, let me know in the comments below, because I don't. I mean, honestly, I think they should just cut their losses and GTFO ASAP. But that's just me, some idiot on the internet who doesn't know anything about anything. As the largest, most saturated EV market in the world, a deceleration of the Chinese domestic EV market has increased investor questions about a potential release of Chinese supply into the export market. Potentially years... Not again. Potentially years ahead of someone's expectations. Not sure whose expectations were, but anyway. As legacy OEMs recast their China EV strategies with local EV partners, we wonder whether these moves are too little, too late. Spoiler alert, they are. So much like my mathematics teacher ran screaming from the room years ago after thinking blood was raining down from the skies, I think Ford and GM should probably follow suit and GTFO. And to be clear, it's not just foreign automakers struggling in China, but many local automotive manufacturers as well. It's an extremely competitive automotive market, and I expect a major consolidation, aka a fuck ton of bankruptcies, in the next 5 or so years. We heard earlier, BYD and Tesla alone account for about 40% of the vehicle market, as in new vehicles sold in China. Just those two companies alone. Everyone else is essentially fighting for scraps. And it is Tesla who far and away have the biggest cost advantage. Last I recall, they're making 6 to 8 times as much money per vehicle sold as BYD. Tesla's going to be fine. Other automotive manufacturers, I'm not so sure. And I believe we'll see the same scenario that's playing out in China now, a massive consolidation, with companies that just simply cannot compete on cost, don't have the technology, don't have compelling enough products, don't have the scale. A few years from now, playing out in Europe, the United States, and other parts of the world as well. It is going to be absolutely brutal. I don't think people, especially investors, can see the writing on the wall. So don't say I didn't warn you. And I absolutely agree with Morgan Stanley's brilliant breaking insight that I've been saying for years, and it's not just me. Expect those Chinese EV makers who do survive, do scale, do have decent technology, decent prices. Expect them to begin exporting vehicles en masse to Europe, the United States, other parts of the world, and eating the lunch of today's legacy automotive manufacturers, the likes of VW, Toyota, and yes, GM, Ford, and many others as well. This is inevitable. The Chinese EV invasion is just around the corner. I think, as I've said in the past, the future automotive market, number 1, in terms of unit sales, Tesla. Numbers 2 through 10, maybe one exception, all Chinese EV manufacturers. If you're lucky, maybe a legacy automotive manufacturer somehow still manages to make the top 10, but I doubt it. Athletic Greens AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. Athletic Greens AG1 is an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a fuck ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. Certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point. It's something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy, wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely, it's not that AG1 is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it, you'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, this is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, snake oil salmon sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. And remember, there is a 90-day money-back guarantee. There's nothing to lose here. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link in the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links in the pinned comment. See you over on Twitter and or Patreon. And don't forget to grab your AG1. Love ya.